Hey everyone, John Henry here, slingshotfutures.com. Welcome to the daily market outlook on the futures markets. This is where we put together an attack method for tomorrow so we can be as prepared as possible. This week has been a relatively tough one all in all. Lots of back and forth movement, lots of news coming out and surprise headlines and all kinds of other stuff. I'm sure a lot of folks are ready for the weekend, especially after a long weekend this past time. So definitely, could be an interesting one tomorrow given all of that. Not a ton of news, but enough to keep things going. Before we jump on into the charts, make sure to swing on over to slingshotfutures.com, scroll down, click on the join the daily outlook newsletter section, and that will log you in and sign you up for our mailing newsletter. That will put you on our email list so that we can send you an email every single time one of these comes out. We send out the videos. Along with that, we send out different stocks to keep an eye on and some different information and statistics. Really cool little newsletter to keep your eyes on. And along with that, every morning, also don't forget to check out the blog post. We post our daily levels right at the bottom there, and that is for our big six as well. All the major levels of support and resistance that we're looking at, keeping an eye on, and potentially even trading around. So jumping on in here, we have the Bund first up. The Bund, fairly good upside movement. We started off the morning pretty back and forth. It seems to be kind of typical lately. We had a new up into a new down into a new up, and it looked like the sellers were going to try to take it back down again. They tried, and they failed and gave up. So with one side giving up, basically sellers just saying, you know what, it's not working, get me out of the way, that turns into buying pressure, right? If a seller exits the market, they are buyers, and that shoves the market up. Now, along with that, we have a small little range here in an otherwise bullish trend. Buyers will be buying underneath. We have channel support. So lots of other things coinciding with the same location, and that pushed the market up very aggressively. So much so that they blew through the highs of the channel. Now, that blast through the top of the channel, that may just mean that they're widening it out. It could even be forming somewhat of a top of maybe a progressive wedge that is getting a little bit more, tight up here. But all things considered, we have a very bullish market that is getting exhausted. We had a huge rally to the upside all the way from the lows to the highs, a big range on the day, at least for the Bund. And again, they got a little overzealous up here in multiple times. We are beginning to put in a 3-push wedge top along with that, and we're seeing lower highs now back underneath the channel lows. Even the wedge can't even get a retest on it, so we are definitely seeing a need for a pullback here on the Bund. Now, all things considered, the buyers still own the market. There's absolutely no question about that. So buying is definitely on the table, but it's going to be tough to buy until we can start pulling back to around 165.64, or better yet, down to 165.50 before we can really start getting interested here. And if it can go even further, the start of that breakout point would be beautiful down here at around that 165.34 area, would be phenomenal. So again, what you're seeing here is we need a pullback. And until we get that, it's going to be really tough to want to continue buying the Bund. So just kind of waiting for a pullback there. Over on gold, very strong bullish market today. It started off relatively range bound, and things just went bonkers at 7 o'clock. Didn't stop going higher. Even on the pullbacks, didn't really stop that either. They had a huge bear move down, completely fails back to a new high. Bears try it again, completely fails right back up. Now notice what we didn't do though. We didn't make a new high, and a lot of times that is a big clue. The fact that they failed to make a new high does show that if the buyers attempt to get it back up now after so many tries, they're likely not going to get a breakout above anymore. So looking to sell above the highs makes a lot of sense here, just due to the fact that we're probably going to begin transitioning into a range. The lows look really good for a possible range. The highs are now beginning to form. Everything is starting to line up for a possible range, even a mid area inside there. So selling above the highs could potentially be an option, but it is a bull trend, so better to wait for a breakdown to buy the lows. The low area of buying power, for me personally, I would love to see 1247. Are we going to get that? Maybe, maybe not. That's a pretty big pullback given how strongly aggressive this is. So at best, we may be able to try to find a pullback down to 47.9, which would be another nice area for potential buyers to come in. So 47.9 to 47 would be that area of pullback, and maybe even a little bit further to retest last week's high going into a Friday. On the bonds, you'll notice there isn't anything drawn on here, and that is on purpose. We have a range once again. We haven't really left this range, and if we zoom out, we can see that generally speaking, the ranges that we've been seeing every single day tend to have a bullish bias. So because of this slowdown that we're seeing, we need to zoom out a little bit and see, where are we? Why is this going so slow, and how can we approach this in the safest way possible? Well, looking at the bonds in the bigger picture, we have that larger channel that's rising higher. That larger channel does allow the buyers to potentially come back in. You can see they widened it out, so we can use that for now. And if that is going to be a channel, the highs, we've got a little bit of a ways to go. Now, if we tighten this up a little bit and say, yeah, but you know what? The channel probably wasn't drawn that way. We would have drawn it something like this, and we can see that they are respecting that area. They broke through it, acted as resistance, they broke back above it, support, support. So that level could definitely be an area of interest. So we copy paste it on the other side, see if it fits, and lo and behold, it fits pretty darn well. A little bit of fluctuation there, but outside of that, beautiful test on the highs, that definitely gives us some clues to keep an eye on for the bonds. Now, there is also apparently a middle area of support and resistance kind of cutting its way through here, and you can see several tests of that as well. So because we have to zoom out to the bigger picture, it gives us somewhat of a clue in terms of what to expect. Over the last several days, we've been rising higher, but in range-bound momentum, right? We've been seeing this a lot. Range, breakout. Goes into a range, breaks out again. Goes into a range, well, chances are, at least if history repeats itself, we're probably looking at a breakout to the upside for the final leg of this move. I say final leg because we came off of the backs of a fairly stiff range. They tried breaking down underneath the channel's low. It failed, came back up in, and held the inside. So that's a very good sign that the buyers may be gearing up to try to get a larger drive up. And at this point in time, given how long that this has taken in the range that we've been seeing, we're probably going to see a range into the overnight session and then a breakout early tomorrow morning, maybe even in the European session, hopefully in the US session. I would love to be able to be a part of it, but might be a little bit too late. So overall, looking for a range into a breakout for history to kind of follow through and keep that momentum going to the upside, zoomed out a little bit. Over on crude oil, we have a nice bull rally working its way higher. Big move up, easy little pullback there, big move up again, and then we kind of petered out for a little while. The inventories hit, brand new high, but immediately failed. That's the inventories for you. And now we're just kind of stuck inside that earlier range that we had on that pullback. So because we're forming this pretty sturdy range inside here, arguably now you could even tighten it up a little bit. We have a bear trend in the short term. In the long term, we have a bull trend that kicked off the morning, but we've given a lot of that back. If we look at this pullback, this is easily pulled back 60-70% of the move. And a lot of times the buyers will look to start buying there as a last-ditch effort, right? This is the last chance that we're going to give it. It needs to go back to the highs now, or they just completely give up. And right now, given how weak of a move we've seen so far to the upside, the buyers can't even really muster up enough to get above the moving average for longer than a few candles. So even if we do get a rally to the upside, I am much more interested in the sell side, maybe at monthly resistance. First of all, at 54.68. If we can get a nice push higher, 54.84 to 94 would be a beautiful area for selling pressure, but we might not make it that far up. At the moment, we are finding support off of a possible trap low, nice little dip below there for buyers to try to come in. And it does appear as though they're trying to get somewhat of a wedge, not the prettiest looking thing in the world, but at least they're giving it a shot. So we may be able to get a little bit of a bull rally going into the overnight session and tomorrow. Overall, though, looking for selling pressure off monthly resistance as well as above if it really wants to go. In the short term, you may be able to find some buying opportunities to catch that rally on up. On the Nasdaq, oh man, the Nasdaq woke up, right? We had some really big movement on the indices. The S&P not so much, but the more volatile ones like the Dow, the Nasdaq had a good chunk of movement. Today, the Nasdaq just completely fell apart. We had a range that left us kind of hoping for more all morning, and then, man, we got it. At 9:30, this thing just dumped through the bottom and didn't stop going. A huge movement down, big push, followed up with another big push, followed up with another big push. The only one that's a little bit weak is the middle leg, but you'll notice these are actually almost the same size in terms of pushes down, except the final one. The final one is the biggest one. So definitely seeing a little bit of exhaustion down there. It looks like the sellers put a little too much emphasis on the downside, ran out of bullets to keep it going, and now we're getting the correction up. Slight little V bottom. A lot of times that leads to a snap pullback, maybe a trap low underneath at around 53.30 or so. I'm sorry, 53. 23, 24 to try to get a bounce there back up. Either way, though, we're more likely to transition into a range at the current point in time. Highs between 37.5 to 34.75. Lows, again, somewhere inside here at around 24. Now, looking at the overall movement, the bears own the market. It's pretty easy to see that the bears own the market. So because of that, what I would rather see is a trap on the highs, maybe a head fake, something like this, and then a turn right back down to finish off that move. Because this correction has been going on for so long, we may not be able to roll all the way back over. We came off of weekly support at last week's high, and we're going on a Friday, right? The end of the week, and we're respecting prior week's levels. That can definitely be a little bit of a clue, a warning sign in this case, that we may not be able to make it all the way back down to the lows, but at least looking for around that 24 area, if not a little bit further, maybe even a retest of weekly support. So I would much rather look to sell on a fake out of the highs and then try to drive it back down. The S&P also had a very nice drive lower, but again, a little bit more range bound. The S&P gave up much more than the Nasdaq did. The Nasdaq only gave back, not even half of the move down. The S&P, however, gave back almost all of it. They came maybe 80, almost 90% back into that move down. That's showing that we might just be stuck in a range. We are getting a little bit of a kind of a wedge formation, maybe a pennant on a bigger time frame, also a bull channel working its way higher. But we have a big range, right? We got that range in the morning. They tried pushing higher. That broke down, and now we've given back almost all of the move down. Chances are, if we find ourselves back at the highs, we're just going to find sellers waiting above it to try to knock it back down. So looking for selling pressure above the highs to cycle back lower. And if we do go back lower, looking for buying pressure underneath the lows. Until then, you may find interim support in the same location that you would find in the Nasdaq, at least structural-wise, at around 23.58. Outside of that, though, looking to play it as a range going into tomorrow, buying low, selling high. So that's going to do it for this one. If you have any questions about it, you can always send me an email, jbrink@slingshotfutures.com. Like we always say, make a plan, trade the plan, follow those rules, and you will do A-OK. Until tomorrow, have a good one.